All right. Thanks for joining us today for the 1004 show. We're here with Tony Lettich of FundingSage. You guys can learn about them at fundingsage.com. Tony, how are you today?
Doing well, Zach. How are you?
I'm doing awesome. I appreciate what you guys are doing with FundingSage because you guys get to feature a lot of businesses. You guys get to help a lot of businesses. Tell me about the genesis of how you guys came up with FundingSage.
Sure. I met four gentlemen as part of an angel network that we had established back in the 2013 timeframe here in Upper East Tennessee in the Tri-Cities area. And we were talking about the various aspects of bringing new startups up to speed and making investments in them. And we were continually finding problems from the standpoint that they had great ideas, they had great technology, they were passionate. The entrepreneurs were just really passionate, but they would do things from a lack of experience that would result in the company imploding and preventing us from being able to invest in them. So we got to talking about, all right, what can we do to help prevent that from happening, to try to get ahead of that curve? Because a lot of these concepts were great concepts. They just structure something in the inappropriate way. And so we came up with a technology solution, which has turned out to be FundingSage and our affiliated products.
So when someone implodes, what type of thing were they doing that really made it so that they wouldn't be investable?
Sure, there's a variety of examples that I could give you, but a couple of quick ones that come to mind would be that, they come forward for financing. Again, they're really a nice, solid, investable company, but they come forward with, $200,000 worth of debt on the balance sheet. And as a result of that, the investors are looking around the table and they say, boy, I'd really like to invest in these guys. I love their passion, but at the end of the day, they want to invest in growing the company to the next level. They don't want to invest in paying off debt. And so that's an example, one example. There are other examples, which include, in some cases, some of the early players might insist on an NDA, and make it difficult for the investors to actually do any due diligence. We've seen that come from time to time. We've had one outstanding company come through, and we were blocked from doing due diligence at almost every stage.
Isn't that ridiculous?
Yes.
I don't understand why. I guess their lawyers telling them to do it, but it's just, to me, it's like, you want this person to be a partner, you have to open up a little bit. And I think in my business and in yours, it's like, guys, like, if someone asks me for an NDA, I just go, cool, like, I'm not interested. Like, I'm not going to sign this thing that allows me to be screwed 5 years later when I passed on you.
Right. Exactly. And the other issue with NDAs from an organization like ours is they're just incredibly difficult to administer. I mean, imagine if we signed one with everybody we spoke to. I'd spend all day, we'd have to have a staff just to sign and execute and manage NDAs.
It's amazing. Tell me, like, what is too much debt? Because I appreciate that a founder would put some skin in the game, but is there a number where a little bit of debt is okay? Or, like, are they ever going to be in a situation where they have some debt on the books, but it's okay debt with you guys?
Sure. Well, let's take the latter part of your question first. Obviously, there are certain types of debt that are okay with us. For instance, convertible debt. If they've taken a convertible note, that's not a problem because we know that ultimately that will convert to equity. The second is reasonable accounts payable. Everybody's going to have items on the books that aren't extended out. And they're within their terms, and it's relative to the size of the company, obviously. But, if you have a startup, they've been operating for a couple of years, they've had, a couple $100,000 worth of financing from friends and family, local angels, that kind of thing. And, they've got $10,000, $20,000 on the books. That's probably not a big issue. But if what they've done in contrast to that is to make an agreement with their attorneys that the attorneys can be paid out of future financing rounds. And so therefore the attorneys start the clock and there's, $175,000 worth of debt on the books. It makes it kind of difficult because every dollar that you invest, if you invest $250,000, most of it's gone to paying off the lawyers.
What's interesting is I don't think I've given a talk on how to raise money before. I've raised a couple $100,000 myself. And one thing that I don't think a lot of people who are raising capital think about is who is paying the legal fees. Because almost no matter what, it's 10%, right? And so
Absolutely.
is that coming out of the fund that you are raising? Is that coming out of your own pocket? Like, what's the negotiation there? And so it's interesting that so quickly, 10% of your business that you just raised is going away, and people almost never think about that.
Well, and typically what we see in the rounds that we do is that current round, you pay for those legal fees out of the proceeds that you receive from the round. But the legal fees are an expensive part of creating a business. And at the end of the day, you want that business to be appropriately documented. You want to paper it in a way that meets the needs of the investors in the future. And if you don't, again, you might be making yourself non-investable.
Sure, absolutely. Are you guys investing only in companies in Northeast Tennessee or all across the country? What does your kind of investment portfolio look like?
Our goal and objective is one of creating an ecosystem in this region, Northeast Tennessee, Southwest Virginia, Western North Carolina. But the reality is that there is not appropriate deal flow here for that to happen of companies that are actually viable. So we invest throughout the Southeast. We have companies out of Orlando. We have multiple companies from North Carolina. We have companies from here in Tennessee. So we go from throughout the Southeast.
Yeah, I think that's something that a lot of people think about that they want to do first, but then ultimately, to build an ecosystem, to build a business that is for a specific area, I think sometimes they have to realize that you have to bring money in from outside of the area. We have a local angel group here. They started to do deal flow for Southeastern Virginia, and I think quickly they realized can't all be Southeastern Virginia. It's just the truth, right? And so if you want your area to grow, sometimes you have to build it in other places as well. And one thing that I think oftentimes angel groups miss is the fact that they're in business to make those other angels money. And if that goes well, that means the businesses that they were helping locally or all across the area are going to be doing better. So if you're getting a return to your investors, likely those businesses are doing well themselves.
Precisely. I think it all builds on itself. And, the $100,000 question is, what comes first, the chicken or the egg? The investment funds or the great projects? And the conclusion that we came to when we did our initial feasibility study on ART was you have to have both. And therefore, there's a built-in need for funding, for capital across the country. There's not enough capital in too many projects. So our objective was to go out, look throughout the Southeast, and we even looked broader than that. I mean, did some interviews with an accelerator out of Wisconsin recently. And so we are looking for good projects wherever we can find them. Now, we typically tend to avoid the Northeast and the West Coast for a couple of reasons. One is the terms and conditions on the West Coast tend to be a little different. So recognizing that, we tend to avoid those, and the capital is a little more readily available there as well. In the Northeast, the cost of living and the impact that the dollar that we would invest has a lot less of an effect on the company than it does here in the South and in the Southeast. So that's a factor that we consider as well. I mean, you invest $250,000 in the Southeast, it goes a long way. You do so in Boston, it's
pays for rent for a month.
Yes.
Are you finding that the companies that you're investing in have, the companies that are applying or are asking to get investment in, what's the percentage of them that actually have some sort of traction and not just a piece of paper that says I'm going to do something?
Well, first, we look to late seed, early stage companies. So one of the goals and objectives we have is to invest in companies that have at least proven that the dog will eat the dog food, so to speak. So we're looking for $50,000 to $250,000 worth of sales revenue. We do invest in companies that are not there yet, but that's our goal and objective.
Is that annual sales or overall sales?
Well, typically it's the same for a company in the stage we're talking about, but ultimately we would look in at, a minimum of 50 to 100 annually.
Okay.
And again, there are exceptions. For instance, we have a really interesting medical device company that is pre-sales that we've invested in. So we'll take a look at the others, but we're looking for that basic traction.
Very cool. So FundingSage started just a few years ago. Give me a behind the scenes look of what FundingSage is.
Okay. Well, FundingSage itself is our company, but it's also a website that provides information, resources, and tools ultimately to the startup entrepreneur. And our goal and objective with it is to recognize that there's just tremendous amounts of information out there on the internet, but the user doesn't know necessarily what information is good and what information is erroneous and they shouldn't follow. Additionally, you can literally spend hours searching on any particular effort. So you can find what you need, but when you're in the process of trying to create a company, you don't have hours to search how do you document X, Y, or Z. Those are administrative issues that you may want to get through quickly. There may be other aspects of growing the business that you really need to get there quickly as possible so that you can actually apply the growth formulas and strategies that you develop. So what we do at FundingSage is we try to provide information, resources, and tools in a manner in which it's consolidated for the user, and we've curated it, and they can go to pertinent information to the issue that they have. Now, we have a number of how-to sections on the website. We do a lot of spotlights of accelerators, of companies, and we try to look at a plethora of issues. We look at ecosystems around the country to try to provide folks a comparison of those ecosystems, what's available in some, what's not available, because as people are looking around, most of those startup entrepreneurs are fairly mobile. And ultimately, our goal and objective is, one, to supplement the existing accelerator ecosystem out there and provide additional information and support for them. But more importantly, the 95+% of those startups that do not have an opportunity to go to an accelerator and take advantages of the great opportunities within those accelerators, to get them additional information in a curated, focused way.
100% agree. I think there's a huge market for that. And I think that's something that we also strive to do and to help those businesses that might not be ready yet, or might be the red-headed stepchild, if you will. And, there's a lot of emphasis on, these high growth tech companies, and I get it, but most communities across the country are going to struggle with creating those type of businesses. And I think there's a reason why we see them in specific areas and not in other areas. So what type of businesses are you seeing that are having success in your backyard?
Okay. We're obviously seeing tech companies that are successful from our side. I mean, we like software as a service type providers. We like educational technology. We like fintech. Scalable technologies is something that we see a lot of. Within the state of Tennessee, there are two thrusts. One is clean energy, and the other is life sciences. So we tend to focus a little bit on both of those as well. Especially since this is an industrial area, the northeast part of the state, and this region is industrial. We have a major chemical player here who has its corporate headquarters here, major R&D facilities. So a lot of the Angel Roundtable members come out of that facility. And so we see some of those as well. And then obviously we see some medical devices. So we're looking to, within the ART organization, create a diverse portfolio. Obviously, within FundingSage, we're looking to help everyone.
What are some of the challenges that you guys have gone through in getting started and then ramping up to where you are today?
Okay. Well, we go through the exact same challenges as everyone else goes through. Our team has some pretty significant experience, but what we pretty quickly realized, even though there's 4 of us and we have a breadth of experience, we don't know it all. So just from the very beginning, what's important when you create a trademark? What aspects and what questions do you need to ask when you start looking at patenting technology? How to scale the company up? how to move from that bootstrapping section or process to the scalability process is another example of a great idea. And of course, everyone struggles with funding. We're still pre-funding, outside funding, but we've been able to finance it on our own internally to date. But those are all the types of common struggles, and we're seeing those the same as anyone else.
Bootstrapping a business is something that's become a big phenomenon. A lot of people like that. Have you found that businesses that are bootstrapping have a hard time thinking about financing? And if so, how do you kind of convince them that maybe this is a good way to go?
Well, yes, we have, and it's because of a lack of time. Typically, if you're bootstrapping a business, you're trying to make the most with a very, very small amount of money. So typically what occurs is you're focused on growing the company, but your ability to grow it is minimal. And essentially, you need help. And the startup entrepreneur has to take that step and get beyond the bootstrapping and pay attention to where his efforts are put in those areas where it's appropriate. And he brings in people to do some of the other efforts that obviously he could bootstrap, he could do himself, or she could do herself. But you bring in other members of the team to help support those efforts such that you can do what you need to do, as an example, as a CEO, which is to go out and prepare that funding package and seek that funding. So it is a problem. And what happens is the bootstrapping process tends to require you or force you to think smaller rather than larger, rather than on a scalable basis.
Yeah, that's fair. And I think a lot of times a person that's looking to bootstrap isn't thinking to raise money, and maybe one of the reasons they don't want to raise money is because they don't want founders. What type of pushback have you guys had in your community for starting this business, if any?
We've not had a lot of pushback from the standpoint of starting the business. Now, we have had a lot of challenge from the standpoint of our products and what we're rolling out. You asked earlier, what's some of the common challenges that you have? One of them is the go-to-market and actually identifying what is it that the market needs and how do you position that within the marketplace. Despite doing interviews with literally 100, entrepreneurs before we rolled it out, we still didn't get it right. And so we're still working on getting our product right. We just completed the beta of our initial product, Turbo Funder. And what we learned was we need to be a lot more customer centric. We need to be a lot more user friendly and how we approach things and focused on the user's perspective. And so I think that's something that early startups, especially folks who have an idea on the technology side, they tend to get entangled with the enthusiasm and excitement they have related to the technology, and they forget that the ultimate reason is, okay, you're trying to meet a need in the marketplace in a way that the marketplace accepts it. And so, likewise, that's an area that most of the startups encounter problems, and we have as well.
And another thing I think is a lot of businesses get information from people, but it's the wrong people, and then they make decisions off of that, and it ends up becoming a catastrophic mistake. So how do you understand or make sure that you're talking to the right people so that you can make good informed decisions? Well,
we've been very fortunate in that again, we have 4 founders that have a real breadth of network. And so we're really plugged in. We're able to create a really solid board of advisors and other third parties who have come in, helped, and supported us in the process. But the recommendation that I would have for the entrepreneur would be, as quickly as you're able to, identify a first-class set of board of advisors and engage those guys and make sure that they have breadth, make sure that they have previous experience. But ask them. You don't necessarily have to follow their advice, but ask them and have them challenge you, because you'll get better answers out of it.
I love to be challenged. I think it's something that makes us stronger. I do believe, though, when you get challenged, the person that's challenging you has to be curated themselves, right? It has to be someone that's not just, oh, I watched it on Shark Tank, so I know what I'm talking about. They have to be the right person and actually be challenging you for the right reasons.
Precisely.
you talked about a board of advisors. What does your board of advisors look like? Not necessarily the person, but the type of person that you're looking at. How big is it, and what type of compensation are you giving them?
Okay, we have a board of advisors right now of 3 individuals, and those individuals, one of them has a broad-based marketing background. One of them is associated with academia, and one of them is really well networked in the business and ed tech community. We chose those 3 thrusts initially because those were the areas where we had the biggest lack of skills internally. So our goal and objective was to identify our gaps and pursue those gaps initially as we went forward. Now, another thing that we've done, and we're in the process of putting together, is a marketing board of advisors. And this is a group of ultimately users who will utilize the product, help us understand how the user sees it. And typically these are less experienced folks, but folks who may participate and manage an accelerator, or they have a startup, and they're actually individuals who may utilize it. So that's another example of a type of board of advisors that you could seek. But again, that's also an area where we've identified we have a gap, so we want to understand it as well as we can. We put together a board of advisors. From the standpoint of the board of advisors, what is the expectations for compensation? I'm going to share that, as the marketplace says all kinds of things. It says, if you bring on an advisor and they want you to compensate them in some way, shape, or form, I've seen articles out there where folks say, well, you probably ought to run to the exits. You don't want to do that because they should be in it for the right reasons. But at the end of the day, my view is that advisors have very limited resources, and the best way to get their attention is to at least demonstrate that you appreciate what they're bringing to the table. So you're looking at some small number of shares that you might provide them over a vesting schedule of a few years. Typically it's going to be less than 0.5% per year, but it really depends on who they are. And the gravitas that they bring. I mean, it's much less than that for the average board of advisor member. But if you were to bring on, if you're a fintech startup and you bring on somebody from, one of the major banks, you're going to want to get their attention. If you bring on a celebrity, you're going to want to get their attention. And, they're not going to do it, say, for 0.25% or 0.1% of the company.
Yeah, I mean, I think it's really understanding to set expectations with them, but then also letting them have a little skin in the game. Make it so that they can get something out of it. And if they do a good job and help guide you to do well, everyone can win and everyone can do well. I think it's interesting that you guys are going to have a separate board of advisors for your marketing. That's something that is going to be powerful for you guys, or how did you guys come about doing something like that?
Well, the expectation is to obtain a level of commitment from a small group of folks who will be focused on helping us upgrade the product to meet the user's needs. And it just came through from a management discussion that we had. We're talking with our board of advisors. We're talking about the gaps that we had. We're talking about the beta of our product and how we can accomplish our end. One of the things that was obvious to us is, we can go out and spend $25,000 and get a marketing group to come in, and I guess they call it a focus group, and review our product. But that's a one-off type situation. And we said, well, why don't we create a board of advisors that could help and support that effort, do something very similar, but do so on a continuous basis. A lot of folks in their 20s to 30s have some pretty significant experience already starting up and running, and some of them have even had exit events with their companies. So they can bring a lot of valuable information to the table, and they're interested in the entrepreneurial community. This gives them an opportunity to participate at a level that they may not have participated in previously.
What do you find that your entrepreneurs, whether you've funded them or not, are struggling with in their business communities? to do to find? What is the biggest challenge for them?
I think the biggest challenge is one of understanding. I mean, there's two major challenges I would share. One is understanding how to structure your company, what to do when you put the company together in the beginning. You know, we've had companies come to us with literally multiple legal structures. We've had organizations, startups come to us where they're paying 6-figure salaries, and you know they don't have any cash flow. They don't have any sales revenue. So understanding what the basic expectations are up front, the things you do, the things you don't do, and how you structure that company. The second issue, and this is once they get that basic structural viability in place, which really isn't difficult to do if you do your homework, is the go-to-market strategy. And that's where we see the biggest weaknesses. And especially in the social media, there's a naivety we see in the marketplace where organizations will come forward, you know, their go-to-market strategy is they're going to pursue social media. But when you try to peel back that envelope, peel back the layer of the onion, they don't have any idea what that means, and it becomes obvious very quickly.
We run a weekly webinar, and the topics change, but one of the topics is recycling your content that you already have to turn that into the business that you ultimately wanted it to be originally when it was done. So taking the press that you got, a blog post that you wrote, something like that. And one of our clients went through this webinar, and at the beginning he goes, you know, I see you everywhere. I don't understand how you're doing it. And then we kind of opened up behind the scenes and said, this is everything that we're doing. And he was like, oh, this is a lot of work. And I'm like, well, yeah, what do you think we do all day? Like, we're constantly creating new relationships with people. We have a social strategy, but it's not just, hey, we have a social strategy. And so I think people think that they can just go, hey, we're going to do this thing and it's going to work. Or, hey, I'm just going to reach out to this super famous person and they're going to respond to me. And it doesn't really work like that. And so exactly. I'm not surprised that people are saying that. We're talking with Tony Lettich of FundingSage, FundingSage.com. Tony, what is some of the biggest challenges that you've had personally in the last few years being CEO?
The biggest challenge, quite frankly, is a lack of time. There's always something to do. There's always a new high nail, a new urgent issue that has to be addressed. And the ability to prioritize your time and focus on those things that are most important is sometimes a challenge because, you know, when you're in the forest, sometimes it's difficult to see the trees. So you have to intentionally step back. You have to look at the big picture and say, now, what do I really need to be working on? So
how do you do that then?
You have to recognize, and you have to, the first way you do it is to try to recognize it yourself. But my experience is you can't be successful by yourself. So I have a good group, a really great group of players who are co-founders. We've also started bringing other folks. And our objective is to bring on folks who will constantly challenge everything we do. We cannot do it the same way. We have to figure out new ways of doing everything, taking things to the new levels, and asking ourselves constantly. So the expectation we have, for instance, if we hire a new digital media specialist is, okay, here's the way we're doing it, but how do you see it? And if you don't agree, why don't you agree? Okay. And then we discuss it and we likely migrate because you recognize that you're not an expert. And so getting back to your prime question, I mean, I look to my teammates to challenge me and to ask me constantly, and I do the same with them. You know, are we focused on the right things?
A lot of CEOs would say this is their business. This is their way or no way. How do you challenge the person that's saying this new way of listening to the people that you're hiring is the way that you should be doing business?
Very simple. I learned long ago. I came out of the corporate world and learned long ago that when I hire somebody, I want to hire people who are stronger than I am. I have absolutely no reservation about finding the best people that I can find. I have no reservation about telling them to challenge me because ultimately it doesn't matter. Albert Einstein himself does not know it all. None of us know it all, and none of us can do it all. We're all limited by 24 hours in a day. And the more of a team that you have with breadth, the more directions that you can come from when you're analyzing a problem, the more likely it is you're going to get to a viable solution. The narrower your vision, the less that you're able to look at a problem from different perspectives, from different degrees around the clock, the less likely it is you're able to come up with a viable solution, in my opinion.
I remember when we started hiring, it was amazing because I was able to not do things that I sucked at anymore, right? And so my creative director, who lives in Denver, he and I would talk about some of the things that I would do before, and I would show him, and he's like, I cannot believe people gave you any kind of credibility with this garbage that you're producing. And it's so true. And the same is being said with my communications director, Paul, who actually lives in the same area as the company. And it's incredible to hire people that can do the things that you want them to do. How do you find your best talent?
We find them by networking. Quite frankly, you know, we go through our personal networks, we go through the folks who work with us, and our best talent comes that way. Good talent tends to know good talent. They tend to recognize people who have the same value systems. Now, we try not to be myopic from that approach, and we let everybody weigh in on the team, because we all do approach things from a different perspective. And we all, whenever we bring in talent, you know, we don't do interviews within a slot. We have each of the members of our team take a look at and challenge and ask the questions, does this match the criteria that we've established?
Very cool. I appreciate that. What is next for FundingSage?
Well, we have, as I indicated, just finished the beta earlier this spring related to our product, and we are now in the process of revising our product so that we can focus on a more user-friendly basis to the individual. We expect to roll out our commercial version of our product to the individual user, that 95% that I was mentioning earlier who don't have the opportunity to attend an accelerator sometime this fall, probably hopefully in late October, and hopefully get that to the market and start seeing some traction.
So, saying that you guys are going to be going to market soon, what's the go-to-market strategy for this?
We're obviously utilizing social media. So one of the things that we've done is we've really ramped up. We have an in-depth social media program. We've hired a digital marketing specialist. We've began doing the exact things that you talked about earlier. For instance, as you know, we have a number of blogs on varied and related subjects on our FundingSage website. So we're now, all of our how-to content, we're converting that content to infographics. We've hired a contractor who's helping us with the infographics and driving. We're also leveraging that same content to create some videos, and created a YouTube channel recently for FundingSage with our first video on it. And we're looking to do at least another 6 or 8 between now and the end of the year. So our goal and objective, quite frankly, is to utilize social media and utilize various other media to leverage the content we've already developed, to expand it rather significantly, and to roll it out on the marketplace, thereby gaining credibility in the marketplace, ultimately with the intent of helping that market user with our tools.
I love it. And I have a webinar for you.
Okay.
To be able to do that, but to recycle the content that you're already doing, right? I mean, it's so
absolutely.
I think all too often people do things once and then they're like, oh, it didn't work. And I'm like, well, you did it once. Like you were hoping that one thing would be great. And no, well, you got to push it a lot.
Yeah. What's so interesting about it is we talked about advisory boards earlier, and you know, we have probably 8 or 10 blogs on advisory boards that cover advisory boards from different aspects on FundingSage. Well, we can put together several infographics. We can put together cheat sheets that we offer to the public. We can put together a little ebook or white paper type thing. So we're really excited about being able to pull all that together. Now, what's making that happen is bringing on the team and moving beyond the bootstrapping. You know, if it's just you and the fundamental management team, you can't do that. But once you begin moving beyond that, you're able to leverage that content in multiple ways.
Building a team and growing a team to better your business is a huge thing. Tony Lettich, I appreciate your time today. If someone was looking to contact you, what's the best place for them to do that?
They can contact us via FundingSage at success@fundingsage.com.
Awesome.
We'll get right back to them.
All right, Tony, I appreciate your time and continued success, and looking forward to seeing you guys roll out your next round of products.
Sounds great. Zach, I appreciate the opportunity.
Absolutely.
Good to talk to you.
You as well.